Morning traders, and welcome to another day with Serene Education. And I'm just going to be talking over the four majors this morning, starting with the euro against the US dollar. Let's have a look and see what happened to euro yesterday. A lot of action. Okay, big down candle. All this happening in and around a breakout of 13,300 just recently. I mentioned on my video yesterday, not very happy with how things were panning out for this pair, because we were pretty much just going sideways after a break of a major resistance level. That was a bit unnerving. Ideally, if a breakout, you want to see a pullback, and then you want to see some sort of support, which happened here, and then it just didn't move. You know, Monday just was this Friday? Friday just didn't take off. And just sat, it didn't go any higher, very small trading range for this pair, and pretty much on Monday we saw almost this hesitation yet again at the same level, and yesterday, well, yesterday afternoon we had the Fed FOMC meeting stating that they didn't see there was any need for further, to think about using quantitative easing part 3. And that just mentioned that things out there stateside were pretty good. They didn't need to have any more help from the government, which meant that great, everything was looking fantastic, and the market just moved. I mean, the US dollar rallied against most of its crosses, and as it stands now, euro has pretty much failed at a very significant level, primarily because we mentioned it, and it's been on the talking points. It's now a resistance level, lower swings here on our weekly, and sure enough, in and around this area here, we've had another failure. If the week finishes like this, another bearish engulfing of this magnitude, then it's pretty much telling us that price doesn't really want to be above these levels. Last price swing, support and resistance, quite clearly here, 13,400-ish on the weekly, clear failure here at that area. So on the daily, we're seeing that, now we've been pushed lower, and in doing so, we are testing a prior support. Okay, previously, little hesitation here at this level here currently, but we are trading below the 20 and 50, and for the first time in as many weeks, we are starting to see the CTC starting to add up across all time, on the daily in particular. We need to see a nice close below the 50 period moving average today in particular to confirm negativity still reigns to the downside. I just want to have a quick look and see in terms of pullbacks and stuff like that. So if I take the low over here, for example, all-time low here in January to the highs we had here in late February, and just drop it, you can see the 23.6 February tracement level happened to be a nice support here at 13,300. Okay, and that's the reason why a lot of us were thinking, well, if it got above 13,300, then it should continue to rally higher to at least the prior highs here that we saw back in early February. That wasn't the case. It kind of just got above it and just sat going sideways for a full week. Not very confident breakout that, and that just pretty much fueled our expectations, or my expectations, that we were going to see further consolidation to the downside, break lower, and now we're testing this prior little support here. But ideally, the next target level would be your 38.2 now on the daily here, just above the 1500 mark. And if price remains below this, then obviously we're trading below all the moving averages again. Now finding a lower swing, quite a significant lower swing here because of this bearish breakdown yesterday from this one. And so we should look at potentially 38.2 being our first target, then 50, and ultimately 61.8. Still remains to be seen what happens on Friday with non-farm payroll figures. If those come out really positive, then you're going to see further downside moving to the downs. However, if non-farm payroll comes out slightly less than forecast, but still higher than the previous figure, then we might not see as much of a downturn. We saw some news out yesterday. Factory orders were down slightly from the forecast. It was negative 1.1. The forecast was 1.5, and it came out at 1.3. So still growth, don't get me wrong, but not as positive as initially thought. So we're still seeing upside. So things could still happen. Ideally, if you look at this upside trend here, price swing over here, for example, is at the 38.2. So if you see any further movement, it could be likely down to 1500 before we see consolidation. Got to see a real break of this level here to see if there's genuine selling sentiment really starting to creep in now on this pair to make sure it falls even lower. So could see some sort of bounce around in this area here as we wait for the end of this week's non-farm payroll, first Friday of the new month, and it happens to be it's a bank holiday, Good Friday, so we're not going to see a hell of a lot of volume on the equities and or the standard share side, primarily because it is a bank holiday. But the Forex market will still be open though. So let's see what happens. Here at the 38.2 would be our next target, ultimately at 1500. Apologies. For our chart, just taking the low we had recently on the 12th up to these highs, and you can see where price is testing now on this retracement level, right through to the 50 now. So a major pullback below the institution moving average, and doing so CTC on the 4 hours looking further shorting incentive wise. Notice the 50% price is traded below that in the last 4 hours, now it's testing the upside. So we're having a slight pullback to the last 4 hours of trading on the Asian session. As long as it remains below this 50% level here at 13,200, then we can see a breakdown, a pause, or a pullback, and then a continuation to the next level. So same thing here, break lower, pause, pull back to the underside of price support, and then a continuation down to this case the 61.8, which will be the inside here at 13,1500, which I mentioned was what the area we want to go to as our first target at the 38.2 on our daily. So you can see how these levels will work with each other intraday as well. So as it stands now, you can quite clearly see 4 hour pretty much swinging higher, swing. Oh, hesitation at a level here, a lot of wicks, very indecisive, bang, the break to the downside. Okay, so beautiful way of setting up here. Now we're trading lower, trading below 38, the 50. It's got to maintain those levels below the 50 now in order to see further progression to the downside. If not, we could see consolidation, a lot of hesitation on this level. Break lower, remains here, CTC, then we should see further shorting opportunities intraday. Next on to the sterling pair. Let's have a look at the weekly. Quite clearly see on the week, it's been a really tough few days, and we were trading into last week. We're trading straight into this resistance level here at 1600, as well as the institution moving average. And I mentioned we could come unstuck here for a while. Sure enough, the first 3 days of this week we've come unstuck. A lot bearish candle. That bearish candle pretty much coming from yesterday's trading alone. So if this continues, we're going to see a major failure here at a major resistance level, i.e. the 1600 and the coming together of the institution moving average, and this could push price lower. As it stands now, I think on the daily, where's my daily candle? There we go. You can see yesterday's candle, upside indecision above the 1600. As I mentioned, we wanted to see a decision candle. We've got our decision candle. Ideally, if we were trading above the 1600, we want to see a decision to the upside over here. Nice bullish engulfing would have told us that, listen here, price was looking to go further. However, in the spinning top above a major resistance level here at 1600, wanted to see a decision. I was expecting it to go higher. FOMC came out, said there was no need for further thoughts of quantitative easing or throwing money at the problem. There's enough growth as things were looking in the States were looking great as it was, and sure enough we had this massive candle to the downside. Sterling really moving lower, and that's our decision candle. So the decision is that it looks like potentially at 1600 we're going to see a major resistance level, and it moved all the way back down again to the previous support and resistance level here, which was at the 5900 mark. As it stands at the moment now, we're trading below this at 15,900, just below, tentatively. However, if we can maintain those lows or trade below the 5,900, then it's broken through two psychological, very strong resistance levels in the past, and in doing so, then we should ultimately look back down to 15,500, back to the institution moving average, or back down to, in this case, if I can just find it, there we go, take it to the highs here. So the low that we had here in Jan of this year, all the way to the high we had yesterday, high of the candle, you can see that the 23.6 mark is currently at where price, this morning was trading, okay, just above the 15,700 mark. So break below 15,900 and close below this 15,87 here would see price trading below the 23.6 mark on the pullback. And if that's the case, then we should be looking for ultimately 38.2 being our next target, which would be here at 15,700. And then back down to 50%, which we had this major support through here at 1565, and then 61, etc., etc., etc. So as it stands now, institution still below price here at 1585, excuse me, and the 23.6 is still trading below price as we stand. However, if price can stay or close lower than 15,900, then we should see further bearishness creeping into this trade. Just be aware that we have non-farm payroll this week, Fridays, and we've also got the unemployment figures tomorrow afternoon. So things could still turn. So be very, very wary of that. So the intraday fall, 4 hour, you can see quite clearly we had a lot of swings. Apologies for this, just trying to get some sort of, you can see swing high, swing high, swing high, swing high, institution moving edge below price, everything was looking fantastic. And then that 1600 area, price really moving higher, however, not moving any further than that, really pretty much falling apart. We wanted to see a bounce, okay, so we had the breakout, then we had this consolidation, but price had to maintain those levels above 1600. That failed to materialize when we saw this breakout to the downside yesterday after the news that came out from stateside. We had this little move to the downside, little hesitation, pullback, then a continuation lower, and that continuation lower has now taken it back to a prior very strong resistance and support level here at 5900, and it broke through it through the bottom end in the 4 hour session now and trading lower than that. So now if the underside of 5900 becomes new resistance, okay, before it was support and before that was resistance, so a lot of resistance beforehand, then a breakout, pullback, support, and then continuation higher. Here the total opposite is happening. We've had a break lower than the 5900. It should now, what used to be support must now become new resistance here at 5900, and then we'll see a continuation lower. Okay, like ideally the institution moving average would be our first port of call, etc., etc., etc. So you take the lows over here, for example, because this is an upside move. Okay, you can see we had a low, and then we had an all-time high. Notice that the 38.2 now is below the 5900. Okay, and as long as it maintains those levels and it trades below the 5900 and the 38.2, then our next target will ultimately 50. Okay, and if it fails at 50, which is the institution, then ultimately 61.8. Okay, that's how we look at these fib retracements as target levels. They do work really, really well. A lot of people are taught how to use them like that, and they'll use them as targets. So failure here, target 1 reached. Continue, target 2 reached. See how it pauses at these levels. Now a break of this, we want to see a failure here at 5900 at the underside, and then target 3, and then target 4, etc., etc., etc. That's how it should be. CTC on our 4 hour, we've got red, red, red. No red at the bottom yet, so we want the next 4 hours to close. Ideally below 5900 would tell you that there's further resistance here. Nice bearish engulfing here at the underside of 1500, and the 38.2 would definitely confirm that we should see further selling opportunities for the remainder of this week. The hourly entry challenge, you can quite clearly see as we were heading higher after the break, the real slowdown, which happens. Okay, you see the highs going higher on price, however the RSI really slowing down. As long as it maintained above the 50, then it wasn't too much to worry about. Okay, so we had the pullback, and then we were expecting a bounce here, and the RSI price was still trading above the RSI 50% line. However, this bearish candle here took it lower, took it right through here, so the sentiment wasn't looking favorable for any further top side, and sure enough we saw price rolling over and then heading down towards these levels before at 5900. So now it's quite clearly see straight into it, then a lot of indecision through the last part of the US session and going to the Asian, also quite tentatively trading lower, and now it's consolidating on the underside of 5900. Ideally what we want to see now is you want to see a continuation lower. So if I draw, you can see as price was moving lower yesterday, forming these lower swings on the hourly, just draw an intermediate trend. So we should see a failure around here somewhere. Ideally we want to see a failure here, like a nice bearish engulfing to the downside in and around this area. So you can just have a look at the time wise. Let's just move it there. You can quite clearly see roughly around 11:30 a.m. roughly around that area we might see further, or we would like to see a setup for further downside movement on this pair. Onto the US dollar Swiss franc. Let's have a look and see what happened yesterday with the news on the US. Yes, nice bullish engulfing at a strong support area. A lot of hesitation in and around this area here. We wanted to see further progression lower. That didn't materialize. You can quite clearly see the price is hovering around the 920 mark. A lot of support through here. Yes, the previous day saw a slight move lower. Well, price opened lower, but we saw price closing higher. Okay, so hesitation over here. We still wanted, if this was to still remain negative, we wanted to see yesterday's candle actually falling lower than the actual area and the support. That didn't materialize. News came out and pushed the US dollar higher. Excuse me. So we had lower swings. Here's an all-time high, swing low. You can see price actually fell just swing low, and a further one over here. This swing low, this intermediate trend now being breached by this candle here. By doing so, is actually broken about the prior swing over here, so cancelling out this downside trend. As it stands at the moment, price is headed higher, back up to this potential upswing of here, this little body wick of here. You can quite clearly see there has been a hesitation in this area before, and it brings it into play with the 50 period moving average on the daily. So ideally, break higher than this in the 91500 mark. Would definitely look for this to potentially start moving back up to these areas that we saw here at 930, and there's other areas as well along the way here that you could potentially look at targets here. 920 potentially is another hesitation area around here. So you can quite clearly see how price has pretty much been moving, fluctuating between these points. A lot of support and resistance through here at 910 in particular, major support and resistance. So 50 period, get above the 50 and the 20 and the 50, then we're looking definitely for further extensions to the upside. However, notice on the daily we're still in a negative trend. The overall negative trend for this pair, swing low over here, turn low one over here, you can quite clearly see that the ultimate downtrend would be in and around that area there. So there we go. We could see price moving back up towards 920 if anything, lots of resistance around this area here. So break above and close. If it maintains these highs above 910, then we should be looking for further opportunities to the upside. Failure, break below 910 again, look for consolidation with ultimately back down to these areas below us. Okay, so looking at the 4 hour, notice a lot of hesitation on the 4 hour chart. This is the beauty about the 4 hours, fantastic, a lot of indecision. Okay, we wanted to see decision. So 920, look at that, a lot of body wicks or bodies above this area here. Some of them trading lower, but a lot of wicks, a lot of indecision. We wanted to see a decision, and I mentioned yesterday on my video analysis, I wanted to see a nice bearish engulfing to confirm after this candle over here, this was genuine sentiment negative, and that didn't come, okay, because of the indecision. Either way, I wanted to see a decision candle, either down or up, and we got it. Bang! Yesterday's FOMC meeting results came out. Price pushed right through a prior ceiling level here, and doing so taking it well up towards the institution, and the last 8 hours of trading has seen it trading above the institution moving average. So on our smaller time frame intraday, we're starting to see bullishness creeping into this, and the longer on a very strong support chart, the more likely we're going to see further extensions to the upside on this pair. So where could it go to? As I mentioned, we can go to major points above us. There's a lot of hesitation. 915 is a potential one. You quite clearly see how price has hesitated. A lot of hesitation here, 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 along this way. So 915 could definitely be your first target, second target, well above this. Okay, further hesitation, a little bit 920, but ultimately way up here to the 930 mark, just higher than, or just short of 935 would definitely be on. But 930, I'll take that one quite. I'll take it if it can. But yeah, as it stands now, it stays above the institution, above 910. Then we should look for further progression to the upside. Hourly charts. Notice as we went sideways, still below the institution, the RSI 50. Okay, still below the institution, still moving lower. However, RSI at the same time, this was going sideways here at the 920 mark. Notice a lot of sideways motion at 920. Notice the RSI was starting to pick up. Okay, there we go, hesitation, which happens. That's what you want to see when you see consolidation. But what I wanted to see though was a nice bearish engulfing, closing lower than 920, and the RSI following price. That never came around, and yesterday's massive move to the upside on the hourly here took it above the 50, and as long as it maintains these above the 50 now on the RSI and trades above 910 in particular, or the above this area, slight pullback, then we could see more sentiment, purchasing sentiment creeping into this pair and pushing it higher. 915, as I mentioned, we would like to try and trade above that, because then 920 will be a definite other target. You can quickly see hesitation along in and around these areas, and ultimately 930-ish would be our ultimate goal for this pair. Okay, so as it stands now, look for buying sentiment as long as it maintains above 910, and look for these levels at 915, etc. to the upside as target areas. Last pair of the day is US dollar Japanese yen. We've been seeing a lot of movement to the upside over the past couple of months. However, 8400 has been a very strong support and resistance level, and we come unstuck at it. Noticeable pullback since we reached these areas here at 8400, apologies. And we've seen price pulling back. Now we want to see how far this pullback is likely to take it. So what we do is we look at our February tracement, take the all-time low here in February to the highs that we had recently in early March. And you can see the 23.6 on our daily here at about the 82.20 or 30, apologies. has been a noticeable support area for it. Yesterday, however, we saw the day before we saw price trading lower than that. Okay, engulfing this prior one. However, we want to see yesterday's candles maintain those levels below 23.6, but that never materialized because we saw a massive buying sentiment creeping in as the day progressed yesterday. And now we came up with this nice upside candle, pretty much engulfing, literally engulfing the body of the prior day on Monday. And as it stands now, we're seeing a slight consolidation. There's a little hesitation. You can see there's a number of body supports, resistance above this where price is trading at the moment now, and you can see that the overall body sentiment is looking like that in the trend consolidation. You take the highs here, then obviously you could look at that potentially. Got to get above these areas in the trend. Let me just make it nice and strong so you can see it. There we go. So lower swings, low swing, and we had a lower swing here. This one's cancelling it literally, but we want to see a nice move above 8,300 to confirm that price is still moving higher. Start getting to see that after this bullish move here, then we could see 8,400 being back on target again for the foreseeable future. So as long as it maintains above the 23.6 here at the 82.20 mark, then we could see potential for further upside movement to occur. If a fail and a bearish engulfing takes it low without any wicks, a lot of sentiment, negative sentiment, below 23.6 here at the 82.20, then ultimately 38.2 would be our next target here at 8,100. It's that simple, guys. Okay, so as it stands now, you want to see, there we go, 82.20, a lot of hesitation at this area. Bounce closed lower yesterday or the day before. However, the institution moving average is still in play. Okay, we want to see a break and close lower than the institution. That didn't materialize, and then we saw a bounce and purchasing power coming into the price. And then yesterday, the FOMC meeting late afternoon really took it to its highs. Okay, so 8,400 you can quite clearly see here on the 4 hour, well above us, and we've had lower swings since then. Okay, we want to see a break of this trend line up at 8,300 at least, or just the 80.30, well, the highs over here at, what are we looking at? This is the price swing support here. Roughly around the 83.20, would definitely see further progression higher. CTC is looking great at the moment now. Ideally, I'd like to see a break of this trend line or this consolidation here to see further progression higher. Hourly entry. Notice the institution moving average below price. Price is trading above the 50% line on the RSI, which is great. Now it needs to maintain these levels. Okay, very, very important that it stays above these areas here. So if you want to draw a line here, make sure it stays above the institution moving average on the hourly. Find support here above the 50 on the RSI. And then we get a nice bounce. So all we need now is a nice hourly bullish candle up, and then they'll definitely tell us that sentiment is looking favorable for longs, as we find. There we go. So you can see higher swing yesterday. If we can stay above here at 82, sorry, the 82, what is that level there? 82.60. Then we should see further movement to the upside. So on the hourly, looking for a nice bullish engulfing here at 82.60 to confirm that sentiment is still looking favorable long. Everything's in our favor. We have a red across the board, but there's still blue candles, so there's no matchup. So as long as it maintains these levels above the institution moving average, then it's still looking pretty for further upside movement. That's it, guys. Please be aware, a lot of news over the next couple of days. Please ensure that you add it to your setups. We have a lot of news. Minimum bid rate today for Europe at 12.45. The interest rates unchanged. The previous figure was 1%. Forecast is for 1%, and we'll see what happens today. So a lot of news for Europe, US ADP non-farm employment changes. See, there's a lot of news going into non-farm payroll on Friday. So if you're not trading, stay on the side. If you are trading, please ensure that you have tight stops. Wait for this volatility. I'm sure there will be a lot of volatility. Okay, and yeah, keep your trading as simple as possible. Look for breakouts, support, resistance levels, etc. Look for candlestick setups to tell you market sentiments. And just trade it. Make sure your money management is in place. And most importantly, trade serenely.